Good afternoon, everybody. Today is Wednesday, the 25th day of September, 2024. Welcome to today's webinar. Now, as always, I have to start off the webinar by showing you guys, if you haven't taken, if you don't have TradingView, you have to have TradingView charts to be able to use our tool. So I have to show you how to take that, how to take the free trial, how to use TradingView charts, or how to get TradingView charts, and how to get data if you're going to be trading futures. Okay, so if you are going to be trading futures, you definitely need to get real-time data. I'll show you how to do that. Now, if you're in here and you haven't taken a trial with us, let me show you how to take the trial. You just have to go to, I guess it's somewhere on here that says take the trial, but just scroll down to right here. Hey, right here. Take the trial. All right. So it's not a sticker shock. It's $25 a week after the trial there, or $90 a month, which is 10% cheaper than that after the trial, or $9.97 a year. That's 23% cheaper than that. So you can get into it after the trial. It's not expensive to use it. You know, even if you only use it for a month and you get in there and you get a feel for it, that's plenty of time for you to get in there and understand what you're looking at, and to go through all the other things, all the other trainings that I've done, and all the other trainings that I will do, and all that stuff. Now, that is how you take the free trial. You also have to have TradingView charts. If you don't know how to get, if you don't have TradingView charts, then again, go here to targetviewtrades.com, and right here, click on Getting Charts. It's going to bring you to this page, TradingView Charts. Click on that. It's going to bring you to this page. If you're trading futures, you need to get real-time data. When you get to this page, click on Monthly, so you get the monthly fees. All right. The Essential is fine for most people. You don't need to look at more than 2 charts at a time. It's got 20 technical alerts and 20 price alerts. That's usually enough to get you going with 2 charts. It's $14.95 a month. That $14.95 doesn't get charged until after the 30-day trial is over. This is like a 30-day. It gives you a 30-day trial. Yeah, you want to do the monthly because every now and then they have really good deals on the annual. So when they do have the really good deal on the annual, they'll probably have one coming up here at the end of October. When they do have a really good one on the annual, you want to take advantage of that because it's really like 70% off or something like that usually. Make sure you take advantage of that when you can. All right. Now, that is how you get the TradingView charts. All right. To get TradingView charts, to get TradingView real-time data from the chart, the way that I do it, from the chart, you would go here. This right here, by the way, is what I need from you when you have your ID. Hover over this thing. I'm logged in as TV Trades. That's what I need, whatever you're logged in as. To get data, you click on that. You go to TV Trades. You go to Accounts and Billing. And it's going to bring you to, come on, this page right here. Okay. To get data for futures, data, it's this one right here. All right, it's $7 a month. $7 a month. You got to pay that. All right, if you want to have real-time data for futures, you can test everything on delayed data, but you just won't be able to place any trades. Okay, because you'll be using delayed data, you won't be able to place any trades, real-time trades. All right. All right. So I am looking at the questions, and I don't have any major questions jumping out at me right now, but let me look and see who's in here and make sure that I cover it. If there's anything that anybody that I may or may not remember had asked. All right, so this is just the NQ today on the 31 range with the basic sniper. It's just a sniper chart. If you were to go look at this, if I copy this and I give it to you right now, I think down here somewhere I can type a message in, maybe somewhere. The question box. Submit a question. Here, I can answer a question. I'll not answer, but I can post that in. Now, if you click on that link right there, it's going to bring up this chart. If you have the indicators enabled, it's going to bring up this chart right here. It'll be read only. In the upper right-hand corner, it will say copy. If you click on that word copy, it's going to prompt you to save it to your own name, and then it'll be your chart, and you can do whatever you want with it. But this is the default chart that I have set up. This is an NQ 31 range. Now, if you don't trade futures, who in here doesn't trade futures? Anybody? I'm going to get into equities and stuff like that in a few minutes. But is because I want to make sure I cover everything for everybody. And alright, well, I will anyway. But this is the 31 range 31 range NQ. Now the NQ moves around really fast, so I like to have something that's a little bit bigger than I would normally use. Normally I use smaller time frames, smaller than the 31 range, if you believe that. But let me go through how to use the indicator. Alright, this is the default range sniper. Now if I just take that off and I take this off, we don't have anything on the chart right now. I'm going to take this off too. Now we really don't have anything on the chart. Alright, now Wayne, this is something that you asked about last week. And, over time you'll get it. But, the price action that you see, just by looking at a chart, you can see what price action you have. Like right here, you had this huge move right here from here all the way down here, which was a low, all the way up here, which was a high, above all that and below all that. That's a huge whip. And in between that right now, you see it's narrowing down in between that. So the price action is kind of horrible right now for the NQ. It is tradable, but the follow through is just not going to be there right now. When you just look at a chart, you ought to be able to see all that. You do not, James. You do not what? You do not just see everything when you look at a chart, or you do not trade equities and stuff like that. I'll give you a second to reply. Okay. But when I look at this chart right now, this is what I see. Right? I see that we have, right here, we have lower highs and higher lows. And at some point, this is going to come together, and it's going to break out eventually. Right now, it's looking like it's going to break out to the upside. That's what it's looking like, right? But we'll just have to wait and see what it does do. Now, without having any indicators at all on the chart, which we do not have any at all on the chart right now. Oh, you don't trade futures. Okay. All right. Well, it doesn't matter what you trade. This could be anything. But without having any indicators at all on the chart right now, you can look at this and say, all right, we have higher bottoms and we have lower tops. All right. So we're in a triangle, but the tops, the rate of descent of the tops is less than the rate of ascent of the bottoms. So this is suggesting that it's going to break out to the top side and move up. Now, how far up should it move? Well, it's probably going to move in pieces when it moves up, but I would think that this right here is how far it'll move. Right? That was a little thing that I could never draw when I was in school. This leg right here is how far it should move. Okay? And where should that start? That should start right there when it does move. Now, I'm just using this chart. This is an NQ chart, but it doesn't matter. It could be any chart. It could be meta. It could be anything. But I'm just using this. So you can look at a chart. At some point, I want you to be able to look at a chart and just see this stuff and get an idea of what's going on. Now, using the tool, you don't really need to know any of that because it gives it all to you. This is what the chart is saying to me. The price action in the chart is suggesting this. Now, I don't know what the tool is actually saying. The tool is going to give us more information. If I just put on the TV trades right here without putting on the sniper, I just put the TV trades on. Okay, so it said it had a long right back here. Target number 1, 21.90. Target number 2, 22.14 and 22.16. Where is this? 230. Okay, so if I go out another target here, and I will show you all this in a minute too. If we go to a couple more targets and we see 242 and 245. So this is 230. The price action stuff that I gave you, I could have gone down just a little more. It would have been down to here. All right, so if I would have done that, it would be from here to right down to here. Okay, and using that leg, that'll get us up to the 240 level, I think, where that target is generated right there, 240.75. You see that right in there. That's just price action that's giving you that information. And I got that from just glancing at the chart. At some point, you can, I mean, if you want to learn how to do that, you can learn how to do that. And I'll, over time, in these Wednesday classes or these Wednesday lessons, seminars, I'll teach you things so that you can sort of see the chart and learn how to do that. I mean, I know that's not what you paid for. You paid to get a tool that tells you all that, and you have a tool that tells you all that. It said to enter back here, and the first target was 190, which it hit. The next target was 214, which it hit, I think, didn't it? Nope, 207. It didn't hit 214 yet. So the next target is 214. It did have a decent pullback right here. It didn't give you another trade yet. The reason, I'm trying to see why it didn't. Oh, this, if it were an up close on this bar right here, you would have had an arrow right there. But it's not an up close. But those of you guys who don't know everything about the tool, by default, it only has long trades on. Just long trades at the beginning of the trend, right, or near the beginning of the trend. If you want to have risk reward inside here, you can check this box, and what that's going to show you is the difference between the entry and the stop, well, the entry and the first target divided by the entry and the reward. The entry and the stop. That's what it's going to show you. That 2.23, that's a great number. 1 or better is what you want to have in there. 1 or better, okay? And no matter what you're trading, that's what you want. 1 or better in there, all right? So this is futures, but it doesn't really matter that it's futures. You know, we could change this to anything else, and I will change it in just a few minutes. I just want to go through these little pieces right here. The mid-trend trade, that is if you miss this first trade right here, and you want another opportunity to get in, or if it doesn't give you an original trade at the beginning and you want to have an opportunity to get in, you turn the mid-trend trade on, and that will help you with that. Now, the show target lines on chart, if you check that, it's going to draw these target lines on the chart for you. See there and there and there and there and there. Those are all the target lines that are outlined right here. You can have those drawn on the chart if you want to. One thing about drawing the target lines on the chart is when it changes direction, for 5 bars, it's going to leave the old target lines on the chart, right? For 5 bars, it'll leave those old lines on the chart. The bias level, this is kind of important because the bias level, if the market's going sideways and really choppy, and you have longs and shorts on, right now we only have the longs on, so the bias level isn't really going to cut anything out. But if we have the longs and shorts on, then the bias level is going to get rid of, like right in here, there might be some shorting opportunities right there that would trigger without the bias level. Without the bias level, put the shorts on. Yeah, so you got a long and a short side by side like that with another long right there. You don't want to have that, all right? And the way to get rid of that is to have the bias level, and let me explain what that does. All right. See, there are going to be times where it still will do it anyway, but it just got rid of some of the trades over here. One of the ones right over there. And what that does, by default, it's set to 233, and that's the equivalent of saying, I want to have this guy right here. We'll set this to 233. Okay, so here's your 233, this blue line right here. Okay, and what that's saying is I only want to have long trades above that, and I only want to have short trades below it. Okay, so you only get long trades when price is above it, you only get short trades when price is below it. You see? So it cuts all that stuff out. Right? You're going to have times here where it's going right in between them like that, and you know that happens. But most of the time it's not going to. You know, most of the time you're going to have nice, clear signals that get you in the trades at really good times. Right? Now I'm just going through all the things that are for the TV trades right here. Okay, so we did the show target lines, we did the bias level, mid-trend trade, the risk reward. You know, the risk reward is in here. We went through the different number of targets that you can have, the position. You can move this box around, up, down, and side to side. You can change the text color. You can change the size of the text. All that's through here. Okay, the pivot look back. If these targets are too far away, you can change the pivot look back to a smaller number, and that will usually reduce the size of the targets. It'll change where the pivots are. Usually, not always. You know, sometimes those pivots are just based on price action. And so if the price action, no matter how far back you look, it might not change it, or how close you look, it still might not change it. Okay. You can draw the pivot labels on if you want to see the things that the targets are derived from. Okay. You can put those on there if you want to. And this number down here, occasionally price is going to look back too far, and it's going to be looking back for pivots to create the table, and it's going to look back too far and it's going to run out of data. And when it does that, you're going to get an exclamation point after this that says it looked back too far or something like that. You can usually just turn it off and turn it back on, or decrease this number right here, make this a smaller number, like 3,000 or something like that. It's just the number of bars that it looks back at, and it'll reduce the number of bars that it looks back at, and that'll usually bring the thing right back on. Okay, that's a bug I still haven't fixed. In here, the styles. This is something that's new right here, guys, from last week. You guys mentioned it to me last week. I'll get into that in a few minutes, okay? But all of this stuff, the mid-trend trade, this is, if you have the mid-trend trade on, let's put it on, and we don't have the bias level on. Okay, so you see this little rectangle right here, triangle right here that occurred before the mid-trend trade, or this one that occurred before the mid-trend trade. That's letting you know, it's going to happen a bar before, and it's letting you know that you have a mid-trend trade likely coming up on the next bar. Okay, it's giving you a little bit of a warning, let you know that you might have a mid-trend trade coming up on the next bar. You don't get it on every mid-trend trade, but it's just giving you that information, right? The bar colors, the background colors, the up-down arrows, the hot tips. The hot tips, they trigger on bars. They're on the beginning bars like this, and the mid-trend trade bars, they only trigger on those bars. And they suggest that you're in a move that is more likely to give you a little more run. It's going to be a little more of a run to the move that you're in. Okay, that's what it suggests. This is the one for the mid-trend trade, if you turn on the mid-trend trade one. Alright, those are all the pieces that I wanted to go over for right now. This is new, and I'll explain that to you guys in a few minutes, okay? But that's the TV trades, and that's all the features within the TV trades tool. Okay, so now let me show you the other features within the sniper tool. Okay, if we go here and we put the sniper on, just put that on, and we'll shut the TV trades tool off. Okay, so the sniper by default, you can't just turn longs and shorts on. You have to have sniping or aggressive sniping on. The risk reward is the same thing in the table. If you want to have the risk reward showing, you just check that. And in this case, it's going to be the same thing. It's calculated the same way. Okay. And this information is based on the last arrow that triggered. All right, the last arrow that triggered. The show target lines on charts is the same thing. The enable bias level is the same thing. The snipe filter. Now this is something that's, it's got one little feature in it that I built in. If you make it 777, click on that, you will see it gives you a little bit of something there. For those of you guys that have to have an indicator, there's something there. I'll explain all that later. But the number of targets is the same. The position of the table, you can move it up and down, change the colors, change the text size, all that is the same. Pivot look back is the same. You don't need to change anything in here, really. You can change the height of the arrow. I made that a feature in here if you want this to be a smaller arrow. You know, you can change it to be a smaller arrow, like that, or a bigger arrow if you want it to be. I don't know what the max size is. I don't remember what the max size is, but I guess the max size might be 150. But you can change the size of the arrow, you can change the color of the arrow and all that stuff in here if you want to. Alright. The look back thing is the same. The pivot highs and lows, you can draw the pivots on, all that stuff is the same. Alright, in here under style, the sniper, that is those. The aggressive sniper I haven't turned on yet. The bar color is the bar colors right here. The bar color actually plays into whether you're going to get an arrow or not. Alright, you don't really have to have the bar color if you don't want to with this. The bar color plays into the TV trades. If you have like a blue bar on a red background, then shortly after that, you're likely to have a long trade. Alright, you're likely to get a long trade. And usually if you have a blue, a blue on a red, if you have a blue on the red, you are going to get a notice that says the next trade could be a long trade. Or if you have a red on a blue, like this, you're going to get a notice that says the next bar could be a short trade. You'll get a notice if you set it up that way. Okay, and I'll show you how to set all that stuff up too in a minute. I know I'm going through this all really fast, but I am recording it all. So you'll be able to go back and watch it all after. Okay. I Last week I ran over by half an hour, and I really don't want to run over this week. And I have some stuff that I want to show you guys that I know, James, you're probably gonna like this when I show it to you anyway. If you haven't already figured it out, you're probably gonna like it when I show it to you anyway. But this is all things that you do in here without even putting on any indicators at all, right? Now, without having any indicators on here, let me get rid of some of this drawing stuff that I put on there. You know what, let me just remove all the drawing objects. Remove 12 drawings. There. Without having any indicators on here, I want you to see when the bar colors, they sort of give you a heads up as to what's going on. And if you set up the alerts, they'll give you a heads up as to what's going on. And the way to set the alerts up in here is you would go like the TV trades. If you're going to put something on the TV trades alerts, I guess this is a good time to explain this. You see how I have TV trades shut off right here? And if I go in here and I set an alert up on that, set up all these alerts on that, and if I just do like a trigger long potential and I do once per bar close and I just say create on this, it's going to create the alert, right? It's going to be over here. You're going to have the alert created over here. This is it right here. That is never ever going to trigger because this was not on the chart when I created it. Okay? If you create an alert, you have to have the thing on the chart when you create it, because it's based upon what you have going on the chart right now. Right? So this one right here, the NQ 100 range sniper, I'm getting triggers on that right now. That was from last week's meeting, or maybe it was from September 25th. I did it earlier today, it looks like, or something like that. But I'm not on 100 range, but I'm getting alerts based on the 100 range. We just got one a half an hour ago down here. Okay. It's based upon what you have on the chart at the time that you create the alert. So if you don't have it on the chart, it's never going to be created. It's never going to trigger. It'll be created, it's never going to trigger. Okay, so you got to make sure of that. So to create an alert, like on the sniper right here, for instance, let me slow down. I feel like I just said 1,000 words in 23 minutes. I think it was 1,000. I think it was more than 1,000. All right. The sniper. Now, the sniper is not going to grab the beginning of the trend. All right, that's what the TV trades is for. Is to get you in early on in the trend, like this. The sniper is to get you in on the pullbacks in the middle of a trend. That's what it's there for. Right? And you can use that in many different ways. Many different ways. Let me get rid of this simple moving average. You can use it in a lot of different ways. With the NQ, with the futures. If you know how to trade futures, if you do trade futures, I like to scalp with futures, and it's great for that. But you don't have to just scalp with it. You can do it on much larger time frames if you want to. You're not going to have as many opportunities, but you could do it. Well, the range sniper you can't do on that. You can do the range sniper on larger time frames, but you can't. They have to be range bars. Okay, they have to be range bars, but you can still do it on a larger time frame. But if you go to something like equities, like let's use Apple, for instance. Okay, let's use Apple. Now, when you're talking about a stock like this, every tick is a penny. So when I'm talking about 100 range bar, every bar is $1. It's 100 pennies. Okay, and you can use the sniper on this, and you can see the sniper works great in here. It does everything that you'd expect it to do in here, right? For the most part, it gives you an indication before price is going to go up, and it usually will give you an indication before it's going to give you the indication. You can set up an alert so that it will do that for you. If you go here to alert, under here, see, I have the range sniper on, and the only thing that I have on the range sniper right now is just the snipe. Right? I just have this sniper on right here. Alright, so like right now I could go in there and set one without turning it on, sorry, if I don't have this turned on, I could still go in and set an alert for this, but it would never show up. Remember, not having it set here is the same as not having it on the chart at all. It's got to be on the chart. It's got to be set on the chart. All right, so right now I can do anything for these purple arrows. I can set up any kind of an alert for the purple arrows. And the things that we have for the purple arrows, we have this, which plays into the purple arrows, and it also plays into black arrows. But that's based upon the range trigger getting ready for a trade. That's what that is. All right, it's getting you ready for a trade. It's letting you know there's a trade coming. It's usually going to show up. The bar that it's showing on is almost always going to be closing in the opposite direction of the arrow. Like, the up arrow on a down close, up arrow on a down close, down arrow on an up close, up arrow on a down close. It's because it's telling you the bar before, or the bar that triggered on, it is just about ready to give you this trigger right here. Okay, that's what it's telling you. Okay. So, to set up an alert for the sniper, you have to have the sniper turned on to begin with, and then you come, oops, not there, sorry. You have to have it turned on to begin with, and then you click alert. You select the sniper, and then in here you can do the sniper longs, the sniper shorts, and well, these are the yellow arrows. Sorry, you can do these, and you can do the sniper long and the sniper short. Right, these are the yellow arrows right here. That's those right there. They tell you next up close. When you get this, like when you get this one right here, this is gonna say the next up close. It's pointing up. It's gonna say the next up close is likely to be a trade. Right, sniper long, next up close. That's what it's saying right there. And it said the same thing right here, but all the pieces didn't come together for it. So you're going to get a bunch of these yellow arrows that don't actually have a sniper after them, a sniper trigger after them. But that's because all the pieces didn't come together. For those of you guys who watch me in the morning, you'll see when we get to the range trigger, there is the one in the morning triggers a lot more often because it doesn't filter things out the way I have things filtered in here. I'll show you how you can just ignore some things if you want to, or if you just want to stick with what it says to do, stick with what it says to do. Okay. But that's how you set the alert for, if you want to set an alert for sniper long, we just do that. You do once per bar close. Then down here, what I would put in here usually is like I do apple, and this is 100 range. 100 range. So it's a $1 chart for Apple. And in here, this notification is a pop-up on the screen. This one is on my phone, and this would play a sound in my headset or on my speaker if I had one. You can have it send you an email if you want to. That's pretty much the ways to set it. You can have it send a notification to another app if you want to, but that's pretty involved and redundant. So you don't really need to do that. But I suppose if you had something in another app that was running based upon something that triggered in here, then that would be useful, but that's a little beyond this webinar. So you just hit create on this, and it's going to create one over here. That's it right there. Okay, so now, anytime I get a sniper long, it's going to give me a notification, right? Now, that's all well and good, getting a notification when you get a trade, but you already got the trade by then. And usually it's going to be okay with the stock. Usually it's going to be okay because you can get in. You're not going to miss a whole bunch. But when you're trading, if you're scalping and day trading futures, getting the notification after the trade is triggered, sometimes that's going to be too late. That's why I have these guys in here, right? These guys to let you know that you have a trade, a potential trade getting ready to trigger, right? And they are based upon this right here. In here, when it got up into the overbought right here, it's saying when it comes out of the overbought, there's a good chance you're going to have a trade. Okay. Now you can see you don't have a trade on every one of those because it filters it out. You will have more if you do the aggressive sniper. You're not going to get one on every one of these. And oops, you're not going to get one if you ever do this. Click on that and go move to new pane below. Okay, if you drag it on top like that by accident. That's what I did. I dragged it on top by accident. So you just go to move to new pane below. New pane below like that. But these yellow arrows are there to let you know what's going on down here in the trigger, right? Because this TV trades range trigger is really, really good. And no matter what time frame you use it on, it's really good. And you don't have to have the sniper on to use that. Okay? Like this is Apple, and you could have the Apple on a 5-minute, and it's still going to give you a good indication of what's going on. And this is where the options come in. Okay, James, this is, I don't, you probably figured this out already, but for instance, today, let's put the regular TV trades on. Okay, we have the regular TV trades on here. And when price came up here earlier today, and it got up in here, right in here, if you were to buy, like, let's say, look at the 225 puts when it's up here right now. See, it pops out of the overbought right here. On this down close right here, is at 225.88. Look at the 225 puts right there. Let's go take a look at the 225 puts. Hang on, I think I had that up here somewhere. No, here it is. Here, I'll do it this way. Here are the puts on Apple today. Alright, the 225 puts. So they've had a range today of 80 to 211. And I don't have a chart for it, but if I did have a chart for it, I would say when it was up here earlier today at the open, it was probably 80 there, and in here it was probably on like $1, something like that. But you had an indication right here, right in here, you had an indication when it came down out of the overbought right here that that it was going to keep moving down. So I mean, that right there, if you're trading options, that's an easy way to pick up money with options. And you know, it does it with everything. It's not just Apple. You know, you can do it with anything, any symbol you want. Do you have a symbol you want to look at, James? You can look at any symbol you want. And you know I don't want to have indicators in here because you know you guys make decisions based on indicators. That's where you start thinking too hard and you start making decisions that you know you really shouldn't have to make. But like if you get this over here, you know, at the beginning of the day, this was this morning at 9:30, the very first candle gave you this long trade right here. And from there you can say, all right, you know, I want to buy some calls on that. You know, if you wanted to, if that's what you want to do. The QQQ. Okay, let's go with the QQQ. But at that point, you can say, I want to buy calls. And just get in there and buy calls. But look at the QQQ. You want to look at the QQQ? Look them here. Now today, it had some pretty good movement. Right, this is all today, right? No, that was yesterday. Okay, so today we didn't have a ton of movement, but we did have an indication here to go short. And right in here where it came out of the overbought, right there. Now let me go see what the QQQ looks like as far as the range today. Hang on. QQQ. And we'll just look at you want to look at today's expiration? We can look at today's expiration. Okay, let me just get this information right here for you. Without getting too much of my information out there, we'll just look at today's stuff. Hang on, here it is. Okay, so here's the QQQ for today. Now, let's just look at where it started the day, right? You had your first indication this morning on the 25th. I thought we had a long over there a minute ago. Alright, well you had your first indication in here. You had your first indication in here that it was going to go long. That you opened up in, this is 24, 24, 25. Here it is right here. I thought there was a long there a second ago. Anyway, price started moving up right here, and when it came out of the oversold, it started moving up right here. It's an indication that you know it's probably going to go up. Oh, I think I was looking at the short from over here. We've got this short. That's what I was looking at. When you got the shorting opportunity here, and it didn't go down right away. So right here, after going up like this, and moving down. The puts are going to get a little more expensive as it moves down right here. All right, and the calls are going to get more expensive as it moves up. The puts are going to get cheaper. But then you get this right here, and when it moves up here, the puts are going to get a little cheaper as it moves up there. We'll look at the range of the puts. That's what I wanted to show you there in just a second. And then you had that indication there, and from there it went from 486 down to 484 half. So we'll say that's the first movement. It was 486 down to 484 half. And if we look at this, let's say you want the 485s, right? Let's say you want something out of the money. And look at the 485s, the range of the 485s today. Let's look at this over here. I go more and I do contract details. The range of the 485 today, I just want to show, because not everybody knows anything about options. So let me just do this right here. Okay, so this is the range of the 485s. All right, the day's range are 16 cents to $1.48. So right up here at the beginning of the day right here, they were probably, I don't know, probably 50 cents right here or something like that. And you probably had a pretty good gain as it moved down into here. Now, right in here, where you came out of the overbought, this is what I wanted to get into. This is really what I wanted to get into. When you came out of the overbought right here, I mean, you got the arrow that's saying take a short right there. That's great. But you got this coming out of the overbought right there. That really suggests that it's going to go down. Came out of the overbought right there, right here. Came out of the overbought again. Still going down. Now you finally get your long trade right here, and it came out of the oversold. This one didn't go anywhere. That one's still, it just finished up. Actually, it's finishing up right now. But I wanted to show when you use the trigger, the TV trades range trigger in conjunction with everything else, you have, I want to say, more precise entries. This is telling you that it's likely to go down, right? It's likely to go down. It gives you all the targets and all that stuff on the way down. Well, these targets are based on this over here right now. This is a 5 minute, so I can do a replay on it. If I move this over, I can do a replay and put it right here, and you'll see what the targets were when that was happening. These are the targets that it had there. 484, 60, 483, 85, all the way down to 78, which it hasn't gotten to, but it did get down all the way into here, into 83s. So target 1 and target 2 got hit. What I wanted to show is so you have the opportunity there, and using the TV trades range trigger, it gives you a more precise entry. And this is on a 5 minute. I mean, you can break that down to an even smaller. Wayne was just asking if I think the 5 minute is best. I don't know how much time you have to trade. You know, for me, I don't like things that take a long time. You know, I like to get in there, make my money, and get out. But if you go down to a 1 minute like this, you know, and you're trading the options based upon the 1 minute, if you have this that suggests prices are going to go down and you have all your targets, you know, again, we'll have to hit the, well, this is doing a long trade based on that. But if we were to throw this on, let me just see. If we put the bias level on this, so it keeps us all going in one direction for the most part. So right here, it had the long trade right in here, right? So if you had gone long right here, it was giving you all these targets on the upside. And you can see that that obviously did not work out very well. But they're options. So you can tell that it's not working out very well right away. And if it doesn't work out right away, you get out of it, take what you know, salvage what you can out of the option. And you wait for the next one. If we shut that off and we put it back on, let's see. Right. Now, I'm not suggesting use a 1 minute, but I was just going to the 1 minute, so I thought we'd have more examples of it. But I guess 1 minute's not really very good. We'll go back to the 5 minute. And what I really want to show you is that when you're coming out of the overbought or the oversold in the direction of the TV trades trigger, it's usually going to work out really well for you. All right, with your options. Like right here, it suggested it was going to go down right here. If you bought some puts right there, based on the information that you came out of the overbought right there, you had this suggesting it was going to go down. You came out of the overbought right there. You bought some puts. I don't know what the value, what the increase was from 486 half down to 485.37, but it's a full buck, and the time span is only about 20 minutes. So that's it's pretty good. Now I don't have anything. I don't have anything that I can show you in real time. I was hoping to be able to get something like that together today, but it just didn't come. It just didn't work out for me today to have enough time to get everything together. I've been dealing with a whole bunch of stuff the last week, but you can see from even the little bit that I had shown you from here to here would have given you a good move, and from there down to there would have given an even better move. And this is like an hour today. So I know. I know, James, that you like to day trade the options, right? Get in, get out, and have 0 DTE probably, right? You can do that if you want to, and you can do it. You want to do it on QQQ. I showed you Apple. You can do it on anything. If you come over here and you look at this, like anything in here. Really, that's all I got. Alright, so Intel today had a big move up. And if you go look at Intel, alright, NTC. If you go look at Intel, this is where it started over here today. Okay, so you got all this blue and all this movement up right here. You didn't have a pull out of the oversold until right here. So on the 5-minute chart, that would have been right at the top. That wouldn't have worked out very well at all. I don't know why you don't have. I don't know why you don't have an arrow right there. Let me see. Do we have anything on there? No, we don't. If I just shut that off and do this. Nope, we don't. You don't even have a mid-trend, do you? No. Nope. Well, it is what it is. The one thing that I wanted to show you that was different, that I didn't have in there last week, for you, was these guys right here. Wayne, this was what your question was. And I know this is a lot. That's why I didn't really make a big deal out of it, because I got to fine tune it. But what this is showing you is when you come out of the oversold, when the background color is right, it's giving you, when you go into the oversold, when the background color is right for it to go in the direction of it, that's when it's giving you this arrow. Alright, so the background color is blue, so you'd be looking for long trades, and you go into the oversold down here. It's going to trigger that arrow for you. And you can set up an alert on that if you wanted to let you know. Like in here where the background color is red, when it gets into the overbought, you know the next bar could be a trigger. You can set up an alert just for that if you want to. And in here, in here, that alert is going to be called, if you're using the TV trades, just as TV trades right here, that alert is going to be called trigger long potential and trigger short potential. It's going to be called one of those two right there. Alright, those are your yellow arrows, trigger long potential and trigger short potential. If you want to create an alert based upon that, you can. Alright, that was, you guys had alluded to wanting that last week because I didn't have it for the TV trades. I only had the yellow arrows in the range sniper. I didn't have it in the TV trades thing. But when we were talking about the range trigger last week, and that's really, I'm going to go into a lot of detail on the range trigger next week, in next week's meeting. But for this week, when you go into the overbought and you have a red background, a move out of the overbought with a red background is usually going to work out well. Okay, no matter what time frame you're in, it's usually going to work out well. And the opposite for the blue. When you go into the oversold and you're in a blue background, coming out of the oversold is usually going to work out well, no matter what time frame you're in. Now this is Intel on a 5-minute. I like to use range bars for everything. I think the range bars, they give you just more information, and you can be better prepared for a range bar because you know where it's going to close ahead of time. Okay, so I know that well, this is what 100 range on Intel, so it's $1. Intel's kind of a small, you probably want to have like a 25 range on Intel. Every bar is a quarter instead of every bar being $1, because Intel's not a very high price stock. But in here, you get the same indication, and like today there was only one indication right here, and it didn't follow up with an arrow or anything like that, but it finally pulled out of the oversold right here at the end of the day. It pulled out of the oversold, pretty close to the end of the day. Yesterday it had one right in here, rippled out of the oversold for that move up. And the day before that it had one right there for that move up. If you trade in options, that little bit of a move is a big deal. Okay, and if you go back and look at this on any other day, if I go over here, let me go over here and look at what Intel looks like. I haven't looked at Intel options. INTC. Here, I'm gonna go to option chain. So let's just look at, for instance, this one right here, 2350. Well, there's no time left, so let's look at tomorrow's. Actually, we don't have anything for tomorrow. The 27th is the next expiration date that we have, which would be Friday. So Friday's expiration dates. And let's look at something right here. The swing high is 24. Okay, so let's look at 24s for Friday. Well, let's look at yesterday's range. So yesterday the swing high was right here, and if we were looking at yesterday's range of 23 from yesterday, I don't know. I kind of want to do what I'm doing. I'm going to go and do what I was doing right here. We'll look at this one right here. Okay, we'll look at the 24s. The 24s for Friday. We'll look at this right now, and hang on a sec. Okay, and so this is this is what the 24s look like right now. Okay, right now there's 73 by 74. The day's range was 50 by 127, and I'm gonna save this and we can look at it again on Friday. All right, let me just hit save on this and do the Intel 73s. INTC 74. Okay, I think you can look at it. This is the puts. Sorry, I don't mean to be looking at the puts. Oops, hang on, close. I'm just looking at the calls because I think it's going to go up from here. We came out of the oversold, so we should be going up to 24s. I just realized that. All right, that's going to be a little bit different. We'll add to watch list. We'll go to contract details on that. It's actually cheaper because the price was coming down right here, so that's going to make the actual option a little less expensive. But see, this was 73 by 74 because price was going down. But let's do this. Is the call the same expiration date, same everything? It's 35 cents right now. It's half the price. So I'll save this, and we can look at this later. We can look at it again next week if you want to. But I'll do INT 74 call. Okay, and for those of you guys who don't know what I'm looking at here, I'm expecting right now that this right here, because we came out of the oversold, that this is going to go up, and I expect it's going to go up to this level right here. If it does get up to that level, we'll be in the money. If it goes through that, we'll be in the money. Now, there's some other things that are happening right here that you may or may not notice and you may not see. But this right here is our leg length. All right, now this is part of the training that I do when I'm training everybody in the morning. And today was leg length day, as a matter of fact. Wednesdays is leg length day. This is our leg length. When you have a leg length, you expect 50% pullback of that leg length. This is 50% of the pullback right here. Once you get that, you expect to repeat that leg length from the bottom. So this is where price should go to. All right, probably by Friday, it should go up to 24.70 is where it should go to. Now, if it does do that, gets up to 24.70 or anywhere near 24.70, that call option that I just showed to you is going to be worth way more than 35 cents. I would bet it'd be worth more than $1. But that is just, I just want to show you one way to actually bring it all together, to bring this in together with the indications that you get from here. This lets you know that it went oversold, lets you know get ready for a long opportunity. This right here, where it came out of the oversold, I know we didn't get an arrow on it because the arrow was getting filtered, but where it came out of the oversold, this is an indication that price is going to continue up. And this stuff right here, this is price action stuff. That's something that I teach people how to trade with, but this is good stuff to understand, and I just explained it to you in a nutshell. The price is always doing the same thing. Always doing the same thing. I figured out how to use this now. Price is always doing the same thing, right? It's always going up and down and up and down and up. And right here, this is the up, this is the down, this is the up. Alright? So right up here is where it should end up. That's what it should do. If it's going to continue this trend, which it started back here, up, then down, then up again. Right here was the up, then down. Then it kind of got sideways in here for a little while, but it eventually resolved to the upside right here. So what it should do is another leg length, this size, like I just described to you, this size from here to here. That's this one right here. That's that leg length right there. It should do that again, at least do that again to continue the trend. Alright, and if it does do that, then yeah, then the value of that call is going to be much more than what it is right now. That's kind of what I wanted to show you. Alright, I want to show you how to use the range trigger in conjunction with the indications that you get on the chart, even a little bit of price action stuff to figure out where price should go, so you can figure out what to expect out of a trade. If you're in an option and you see it start to run up in price, don't be afraid to take profit on an option, alright? Because options have so many things working against them, and if you are profitable with options, you should take advantage of that as soon as you can. Okay? You don't want to let options just sit there forever. Unless you have a leap, you don't want to just let options sit there forever, because you're losing time value. As every second goes by, you're losing time value in that option. And I've seen options that were profitable go from up 200% to worthless in a matter of a day. So you have to be careful when you trade options, if you're going to trade options. If you trade futures, well, there's different schools of thought, and I guess I'll take a minute to just go over the different schools of thought if you want. With futures, you have your risk is defined by what you choose when you put it on, and what you choose as a stop. Now, if your stop gets jumped, of course you have unlimited risk. But with options, if you're buying options, your risk is limited to what you paid for the option. All right. So like those 35-cent calls, they're $35, right? So my risk would be worth $35. That's it. And if it doubles, I have $70. And if it doubles again, I'd have $105. But that's with one option, and my risk is the amount that I paid for it. If you sell options, then you have unlimited risk, but you have to be prepared to cover that. If you sell it, you have to be prepared to cover the short. And I don't recommend, I'm never going to recommend that anybody do that, because that is okay. Mark, because you can't understand how something that moves that fast is useful. Okay, yeah, well, I'll get into it in a lot more detail next week, Mark. Okay, this down here. I mean, it's useful in a lot of ways. It's probably one of the best things I've ever created, most accurate things I've ever created, anyway. As far as letting you know ahead of time and actually getting you into a trade. When you put all the pieces together, it's a really good thing to have. Hey, Dan. Alright, well, it's all recorded, Dan. I'm going to be wrapping it up here in about 5 minutes, and it's all recorded. But so far, I've gone over a few different symbols and options, some things about how to use options, some of the options. We've actually looked at some, like these guys right here. And I was saying these Intel calls right now, these expire on Friday. They're 24 calls. And based on the information that we have on the chart right now, I'm suggesting it's going to get up here to 2470 over the next couple of days. And if it does do that, then this will be worth a lot more than 35 cents. You can see it's up 105% today. And I expect it'd probably go up even more than that over the next 2 days as we get closer to expiration. Okay. But after the yellow arrow, the yellow arrow is just letting you know that you have a trade likely to happen soon. Alright, that's all the yellow arrow is doing. It's not giving you, like, the yellow arrow always happens, the bar is closing opposite the arrow. So on a down close, you get this yellow arrow. That doesn't mean go long on the down close. That means wait for the next up close. Okay, that's basically what it's saying. When you get the yellow arrow, it's saying wait for the next up close. It's probably going to be a long trade on the next up close. That's what that yellow arrow is saying. The yellow arrow down is saying it's probably going to be a short trade on the next down close. Right, they're happening ahead of time. By the time you actually get, like when you have the sniper on, by the time you actually get the sniper, the yellow arrow has already happened. Then the sniper happens after. When the trade triggers, the sniper happens. The yellow arrow is triggering before the sniper. Okay. Yes, Wayne, that is it. That is it. So, that's the majority of what I wanted to cover, really. I wanted you to see the value of having this. I wanted to have more examples for you with the options. Hopefully this is going to move up and we'll be able to use that as an example next week when we meet next week. But next week's meeting is going to be mainly about the TV trades range trigger, and I'm going to go into that because I have a tendency to see things and think it's really crystal clear to everybody, and I talk too fast, and sometimes it's not, and I really need to slow it down. And the range trigger does a lot of things that you may or may not notice, you may not think, and it's a really valuable tool. If you understand how to use it and what it's telling you, then it's giving you a lot of information that is going to help you get into some really good trades. And again, you don't have to trade all day long. I know if you're trading options, it's not like trading futures where you're trading in and out, like for me anyway, usually 20 times in 2 hours. But it's, if you're trading equities on a longer term thing, which is a whole other thing that I'm going to be getting into, yeah, I'm kind of curious right now. If any of you go to, let me just go here. If you go here to Zacks.com, go to Zacks.com. Hang on, like this. What do you have for an ad that pops up in here? See, this is Annuity Alliance. What do you get for an ad that pops up in there, and here, and here? Send me a screenshot. You can email me a screenshot of what you get, or text me. Just take a picture on your phone and text me what you get. I'm curious because I always get this. And I always get the same ad, and it's supposed to be rotating in and out every 30 seconds. And I always get the same one. So I'm curious what everybody else gets, because I'm going to be putting one there pretty soon. But what when you go to larger time frames, like if you go to the 30-minute or something like that, this stuff works the same on the 30-minute as it would on anything else. It's just your risk is going to be a little bit different. But if you're trading options, for longer term options, James, if you're doing longer term options on equities, or even, this is Intel, but if you do it on the QQQ, you can do the same stuff, looking for the same indication. If you have a pull out of the oversold in the blue, chances are it's going to be going up pretty soon. Now, this is not a range chart. This is because I have the sniper on there. You can put this on. The same thing. The chances are it's going to be going up pretty soon. And if you have it in the red, if you have a pull out of the overbought in the red, the chances are it's going to be going down pretty soon. Now, it's been so bullish lately that you could almost always buy and eventually be right. But, like right in here, when it comes out of the oversold in its blue background, that's all good stuff. You see what I mean? You don't get it? Okay, what do you get? What do you get when you do that? What ad does come up when you do that? I know clear my cookies. I get this here. I got it at Best Buy. I got it at Office Depot. I got it at Office Max. I got it at Walmart. I got it at Sam's Club. I got the same ad over and over and over again in my town. It's not just my computer. Believe me, I have several different computers in the house, and I have different networks in the house. And I still did the same thing in the house, even on different networks. So I was curious what you guys get. Okay, if you have nothing, it's because you have a because you have a ad blocker up, probably. But yeah, I mean, when I went to Raleigh and I did it on Macy's computer in her dorm room, I actually got something different there. And some of the guys that I've been having meetings with the last couple of days that are spread all over the country, they were getting different things. And so I was just curious what you guys were getting in there. All right. Well, anyway, I don't know if I don't feel good about this one, but I don't know how much information I actually got across to you guys today. I'm not feeling 100% right now. Maybe that's got something to do with it. But what I really want to show you is that you can, using this information down here, coming from just the range trigger by itself, just the range trigger by itself, using just information from the range trigger by itself, you can trade options. If you want to trade options on equities, you can trade options on equities, and this is the QQQ. You can trade it on the QQQ if you want to. If you wanted to have something that gave you an indication of what kind of a trend you were in overall, you can put on the TV trades and use the background color. So if it's blue, you're looking for things coming out of the oversold. If it's red, you're looking for things coming out of the overbought. And trading in that direction. Okay? But I showed you the hot tips. Now the hot tips, that was created mainly for futures. Right, the whole hot tip idea was mainly for futures, but I wanted to get off of futures a little bit because as in the future, no pun intended, in the future, this stuff here is mainly going to be about equities and trading stocks and ETFs and things like that. Okay, once I get into this, and that should be probably starting next week. And that is something else that let's look at this page here, for instance. Hey, that's not up to date. That's weird looking. Let me refresh this and see. That's better. Okay. But, Zacks gives, like in January last year, these were the 4 picks that Zacks gave. Alright. And they gave this one here, the CAMT. And that is this. So Zacks gave the pick right in this area right here in January. We had TV Trades gave the pick right there. And the re-entry there and there during the year. Alright, I don't know, this is on a daily chart. This one is. And the VIRC was another one of theirs. They gave their pick over here. And the TV Trades gave the re-entry a few times during the year right there. Alright, and that's on a daily chart. And this one here, LRN, Zacks gave it way over here, and TV Trades gave it 4 more times during the year. That's for people who are investors, people who are buying stocks and holding onto it for a year. They're buying a whole bunch at the beginning, or they're loading up, they're establishing a position. And so they'll buy some, and then they'll buy some more, and buy some more throughout the year. When it pulls back, this was the initial Zacks pick right here. We had a TV Trades in there too. And we had the TV Trade one before that over here. But, they do all the fundamental research, and they pick these stocks that they expect are going to go up. So they only pick stocks that they expect are going to go up. Well, at the beginning of the year, the stocks that they pick, those are the ones they expect are going to go up over the year. They don't pick stocks they expect are going to crash over the year. And so if you just follow their stocks and their picks over the year, you can get a good indication of where to re-enter when it has a pullback. Like in here, I had this period in here where it pulled back. Another one gave it right here. That was our stuff, gave it in right there. And by that time, they probably gave up on the whole thing. When they have these deep pullbacks here, they probably stopped talking about it. And, for us, it's just an opportunity to enter. again and again and again. But that's where that's all going. You know, the whole re-entry thing. Oops, I didn't mean to do that. The whole re-entry thing is something that a lot of people are afraid to do. If they miss the stock at the beginning, if they miss it back here in January, they just won't look at it anymore. And that is something that that you guys have an advantage, because this is going to give you the great entries all year long. You know, as it comes along, and you can set this up. You know, depending what level of trading view you have. Like I could set this up on a daily and let it run all year, and it could be, you know, I can have 400 alerts over here. 400 I can have set up. So I could have, you know, everything in the Dow set up to give me an alert when it's got a good indication. And in there I was using daily mark for investing. I was using daily. The range, it would depend on the actual stock. Okay, depend on the price of the stock. If you're going to go to range charts for investing type things, you know, the larger the price of the stock. Like this one right here, you know, I used 100 range on this when I was looking at it earlier. I was using 100 range because it's $1, but even 485 you might want to use even bigger than that. Maybe 250, so every bar is $2.50, or $2, maybe 200, so every bar is $2. Okay, 250 would be every bar is $2.50, and 200 would be every bar is $2. Okay. When you're investing, you're going to be, you know, the time value of the bar isn't as important as the actual price value, and you know, range bars have no time value. You know, only daily and hourly and minute and those kind of charts have time value. All the other charts don't have any time value associated with them. And you know, on every one of those, you give up the time value for something else. With range bars, you give it up for being limited to the range of the bar. But there is so much more that you get out of being limited to the range of the bar. You know, whereas with volume charts and tick charts, transaction charts, you give it up so you know how many transactions are going to happen within a bar, but that's not useful information. You know, how much volume is in a bar, that's a little bit useful, it's a little bit more useful, but it's still not that useful, and you can't be proactive with that kind of information. Okay. Alright. So I'm going to wrap it up, guys. I've run over just a little bit today. I really feel like crap. I hope I feel better by this time next week. If anybody has any questions, all you have to do is email support@targetviewtrades.com. If you haven't taken a trial with us, hang on. If you haven't taken a trial with us, go here, go straight to TV Trades, tvtrades.com. You can click on that. It's going to be down to the bottom. And you can fill this out. This is all it costs. If you go to tvtrades.com, if you go to targetviewtrades.com, it's a little harder to find the trial thing. I guess it's on the home page. I guess you go straight to Sniper too. You can do it from here. Yeah, here's the trial stuff here. It's a little harder to find on Target View Trades, but it's on there somewhere. If you just go straight to TV Trades, the trial stuff is all over. You can click on any one of these things. Okay, if you haven't taken the trial, just go to TV Trades. tv-trades.com. tvtrades.com. You can sign up for the trial there. Okay. And that's it, guys. With that, hang on. Is there one more question? Yeah, there is. Okay, that's good. All right. Thanks, guys. Thank you all for coming today. I feel like I went over a lot of stuff. I feel like I did. Part of me does, but I don't know how much I actually did. Hopefully it was useful to y'all. And if it wasn't, let me know. I can go over stuff next week. If I skipped anything, or if there was something you were hoping you were going to get out of this that you didn't get, let me know and I'll cover it next week. Okay. And next week my plan is to cover the range trigger. All right. Because it's important that you understand what this is doing and what information it's giving you. Okay. Because it can be a really valuable tool. All right. Thank you all for coming, and I'm going to shut the recording off right now.